So right now, the world is looking at inflation. So you look forward and say, okay, we have inflation and that is the narrative. What's going to happen from here? And is the market pricing that? So if you want to price in more inflation, it's kind of in the price. So your probability of making high returns is low. But if you can find a set of circumstances that could come into play where inflation falls or growth falls, well, then you can make a ton of money because you're going against what is priced into markets. Looking at the P&L makes you think, oh my God, I made and lost this much money today. And that becomes an emotional state of fear or euphoria. But if you're just looking at dispassionate price action, it's different. And I haven't always done that. And it's different with crypto because I don't use leverage. So I don't have to obsess over the price. But in macro, you tend to use a lot of leverage otherwise. And then you have to obsess over the price because you're going to get into deep trouble if it goes against you. So again, crypto's really taught me the joys of long-term investing, which I've always been a long-term investor, without leverage in something volatile enough that gives you high returns. So it's this, and then moving further into the future, what is the big picture influences? So it's most people bizarrely in macro are very chart driven because we're very visual, because you have to hold this mental map of how everything fits together. And it's all at interconnectedness between, economies, markets, and between markets, and understanding that relationship overlaid with human behavior. So it's macro has always brought a certain type of person. They tend to be very smart in a broad way because it has a unique skill set. It's because it's really hard for some people and really natural for others. It was really natural for me because I was an incredibly visual person and I was always joining the dots, thinking forward, living in the future. Other people who are very detail driven, now driven, you can be macro, but it's very different. You tend to be more model driven and stuff like that, as opposed to thought driven. Yes, crypto, Ethereum has been my best ever investment from a P&L standpoint by a long way. And I've had some other great trades in my life, and I've had some absolutely terrible ones. My worst investment was not even single investments because I don't really remember them. It's when in 2009, I overrode my macro framework when my economic indicators were starting to say the recession had bottomed and that the worst of the crisis was over. So let's say you're an owner of Bitcoin, which I am. You are highly incentivized to protect the network at all costs. And to spread the gospel of the network. Because the more people join the network, the more the value of the network goes up. But that's behavioral incentive 101. That's behavioral economics. So it's incredibly powerful. So it will always drive people who only see that one thing. Because A, it's given them some return, and they want to defend it at all costs. And we see that it remains tribal because of the element of tokens. If it was a technology and share prices, it's different because you're not part of the network, you're just a passive owner of the shares. But tokenization is different. You're an active owner of a network and participant. The reason the gas fees are so expensive in Ethereum is because it's so popular. So that opens up opportunities for other chains. Do they become a chain that ends up being larger than Ethereum? Who the hell knows? And it doesn't really matter. People take it like it's a personal thing. It's like, do I care whether Google is bigger than Apple or Apple bigger? No, they're all going to exist. Yeah, I mean, I think it goes over 20,000 and I have done for a long time. And there's a potential for even further because of the staking dynamics and stuff. But my general view is that it goes to 20,000. And And I say that with a relative level of confidence. That's just a repeat of what Bitcoin did in 2017. It kind of overlays pretty well. It's not perfect. It was perfect for a while. The charts were like spooky tick for tick. Now they're not, but contextually kind of makes sense for me. It's only a 4x from here. I mean, we've seen Bitcoin do 4x or ETH last cycle did, 4x, 5x, 6x in the last month of the year. So who knows? I think the cycle extends anyway. I think it's not going to be the same Bitcoin halving cycle that we've seen. I think it's changed because of the nature of people who are in the market now as well, with the institutions coming in and others. Macro investing is about living in the future and working back to the present day and trying to assess the probabilities. So what you're looking at always is the knock-on effects. So it's like a decision tree, and you're trying to assess the probabilities of the decision tree. So right now the world is looking at inflation. So you look forward and say, okay, we have inflation and that is the narrative. What's going to happen from here? And is the market pricing that? So if you want to price in more inflation, it's kind of in the price. So your probability of making high returns is low. But if you can find a set of circumstances that could come into play where inflation falls or growth falls, well, then you can make a ton of money because you're going against what is priced into markets. I overrode it with emotion and said, yeah, but we're going to have a double dip. This is always going to be worse. And so I remained short and I didn't do what my homework was telling me, all of my macro framework. And that was a mistake I didn't make in 2020. What's fascinating is my second largest holding now, from an equally weighted basket, second to Ethereum, Sandbox. I haven't bought any. It just went up 20x in the last month and a half, which is crazy. I mean, I would not have my second largest. I would not take that position, the second largest position in Sandbox, but that's where it is. And I'm not rebalancing for the time being. I'm just letting this phase play out and see where these things go. So yes, it's a mix. And so I've got some DeFi protocols, because you can have a chain like Doge, which has a lot of investors, but not enough use cases. I think it may come because it's such a big chain with so many people on it that why would you not build applications for it? But it's a very lopsided Metcalfe's law. So it should be very volatile in price because once the investors leave, there's no stuff. Ethereum is so deep and so rich an ecosystem with a number of people building on it that it's incredibly powerful. And everybody has to realize is whatever people think the narrative is in Bitcoin, about Bitcoin being money, the reality is the medium of exchange in Web 3.0 is ETH. I mean, all NFTs are priced in ETH. Sotheby's are doing art auctions in ETH. DeFi is based in ETH generally. The metaverse is in ETH. I even commissioned a headquarters for Real Vision in Crypto Voxels, basically values the network on the number of nodes on the network, and they're basically the number of connections between the nodes. So yeah, I think it goes further and higher than most people imagine. Bitcoin's adoption is relentless for different reasons. It's a great balance sheet asset. It's a savings asset. It's a long-term vehicle. It has that, incredible qualities to it. And I think adoption just continues relentlessly over time. So I don't see any change to that whatsoever, even if the layer 2 doesn't really take off, even if they don't build smart contracts on it, I don't think it matters. I think Bitcoin has its value proposition and people are pretty comfortable with it. And it's very different to Ethereum. It stands in its own, and it's universally accepted for what it is.
The cycle extension going to maybe mid next year to blow off top is in mid next year or beyond that?
I think mid next year. I think it's somewhere around if ETH we've just discussed is so important to the current environment of where we are, arguably it's more important than Bitcoin because of how much is being built on it and is driving prices because of NFTs and DeFi and all these things moving the price of ETH. Then the ETH 2.0 staking, whenever that happens, and not the staking, the release of ETH 2.0 I think around that is the moment.